Okay, Marcus Anthony, go ahead.
All right, good afternoon. Thanks for attending the Homs Analytics webinar discussing the ES chat room and basically what we do in the chat room and what I do in pertaining to trades and the technology that you see in the webinar here right in front of you is what's in the chat room every day from the opening of the chat room to the close of the chat room. And the technology is really the foundation of a lot of the overview that I use in creating trades. I use the technology you see. I use a couple of my own charts, which are just basically trading charts and certain time charts, like a 60-minute, a weekly, a monthly. And I also use another set of charts that I'm getting from Fari to help me have an overview of what's going on with the ES product. Now, I wanted to just speak briefly about the format and structure in the chat room. It's pretty simple. I get there probably around 7:45 Chicago time, 45 minutes before the opening bell, and I start organizing my thoughts and information. I start the recording because we record everything in the chat room from the beginning of the day to the end of the day, and I'll explain the reason why for that. And also, when the recording begins, and we wait for the bell to start the market opening, I step into the room, welcome everybody that's there. People, for the most part, join in the chat room from anytime from 8:05 to the opening bell. And a lot of people casually step in a little bit later than that, like 10, 15 minutes. And as soon as you step into the chat room, you're seeing all the visible technology in front of you, which I will talk about and explain as to how valuable that is. The purpose of the recording is that we are creating an audit trail of everything that's said by me on the mic during the day. And the purpose of the chat room and the text of the chat room is that I speak in the chat room about when I'm getting ready to prepare for a trade. I chat up in the chat the number of the trade, and then I will put the details of the trade, a buy, a sell, a stop, target. And for the most part, what we create by that is a very, very important transparent environment. And in that transparent environment, we have trading protocol for all the attendees that are in the chat room, which is obviously the people that pay for the subscription. It's their trades that actually, that spreadsheet that Fari showed you is the performance of the chat room since October. And the performance are those trades that the people in the chat room are taking as I announce where to participate at, the levels, the stop, and the exits. So I'm basically on top there, overviewing everything, texting, talking on the mic when to get in, with all the parameters as to prices and stops and targets. And those folks that take the trades, they participate by actually doing the trade. The trades are not my physical trades. The trades are the attendees in the chat room's trades. Why is that so valuable? Because they are the ones that are paying for the subscription. They are the ones trading their money, being in the chat room while they subscribed. And of course, the end results is going to be if they make or lose money. My job as a moderator is to keep order in the room, keep protocol in the room, but more importantly, to put the trades out there that are suggestions on my part where to enter, where to exit, and the risk management, which is I call the stops and profit targets. Now, when you have that done, Nancy is our admin individual, besides a very important part of Homs Analytics, as she basically is the nuts and bolts behind the scene of everything. She's monitoring the recording and matching it up with the chat text to make sure that they're in sync with each other and that we confirm all the trades that individuals are making And therefore, at the end of the day, we have a recap of the trade numbers, what the trades were, is there a profit, is there a loss, and what the notional value of both those losses and or profits are. And then she keeps that in her spreadsheet, which she puts together most of the time every night. And that was that spreadsheet that you saw Fari exhibit prior to the beginning of this presentation. And it's just a combination of hard work from a lot of people, and mostly Nancy doing all the smaller admin work so that everybody can see what we're doing that's wanting to come in possibly or is interested in finding out. But the most important part of the ES chat room is our protocol and our transparency. And I believe strongly, being a trader for 45 years, that having that information and substantiating that with the individuals that are trading as subscribers to our chat room is really very instrumental to saying, why wouldn't you do this? This is outstanding. It's transparent, it's clear, and the return of the money you pay for what you're making as you're trading is almost 8-to-1 on a given basis. And those trades are all one lots. I talk to people if they want to trade more than one, that's their choice, but we want their first trade to validate the performance. If they need help with managing a larger position with more than one trade, I'm always offering insights to that. I am in the room for the purpose of all the subscribers / attendees to make money. Otherwise, there's no purpose for me to be in the room. My suggestions, I put a lot of work and effort into them, and that's a little bit what I want to talk about. So when I come in at about 8:15 to start the recording, I post ES levels that I have from my work and other information I'm gathering that I pin in the chat room. So no matter what time you come in, you could see these pin levels. What are they? Well, a median level, an up level, and a down level. And sometimes the up and down levels are multi-levels because we have big moves as we've experienced. The other thing I do is I try and make everyone aware and ask their help as well. Are there any news events coming out at what time, and are we missing anything? And we talk about those because why? I don't want to start putting trades out there in the midst of a news event that could possibly cause the market to have unusual volatility moves up or down, which we've seen a lot of. So we talk about that. Normally that takes place at 7:30 Chicago time, 8:30 Eastern, and at 8:30 Chicago time and 9:30 Eastern when the market opens. Once all that's out there, now what we're looking at is the different tools that we have to create these trades and be successful in what we're creating. And it's a combination of a lot of different information that I'm taking in and basically calculating what it is I want to do. The charts that you see in front of me, which is our tech created by Fari at Hamza Analytics, is basically left to right. You'll see 1, 2, 3, 4 5 vertical alignments of charts. And above them, you'll see a grid that has a lot of different stock names, index names. Up there, you'll see colors which are green and colors that are red. And what that depicts is basically when the market's live, is you're seeing buys and sells happening in all those different indexes and those different names. Why is that important? Because obviously if you see continuation of red, that means the market's selling off. Continuation of green means we're running up. Mix and match means the market's going side to side. Very valuable, very helpful. Why? What are we looking for? Well, we know that ES is a very instant gratification type of product. And what I mean by that is it moves quickly. And a lot of times, if you're not positioning, which most people don't do, you're in for very brief stints of time. My trades that we're putting on in the room, I bet you every one of my trades lasts probably less than a minute, maybe a minute and a half at most, because the reaction time to what we enter is very quick. And what we're trying to accomplish is if it's a scalp trade, We're making sure that we're taking money off the table. And then those that aren't, those take a little longer because we see a trend that's starting to unfold that we want to get a greater profit in return than maybe a scalp trade, which might be 4 or 5. Maybe we're looking for 8 to 12 to 15 points. That would be a trend trade. And I qualify these trades basically by what I'm seeing and what all the other technology is telling me. So when we look at these charts, what are these charts telling me? Well, the one on the far right is the easiest one to describe because everybody's very familiar with a bar chart like that. Because why? Look at the top. SPX 15-minute time frame of those bars where you have your body and your wicks. Pretty simple, okay? And you see that red line and green line inside of the top of that chart? That's DMZ. That's our important area of a trend starting to happen to the upside when it breaks from the bottom up, and the red bars are going through it, and obviously when it's driving down from the top side of that through it into the bottom, and there's a middle dotted line there, which is the median of that activity. And you can see that the variations of that DMZ trade change dramatically. And if you really look at the chart there, you'll see how it's changing and why. Well, when you have big moves up and big bars up and big moves down and big bars down, the DMZ widens out. And when you see a trend like you see on the far right, it's a constant trend that everything is just gradually laddering up, staircasing up. It tightens up the DMZ zone. Very important area for us to pay attention to, okay? That's the 15-minute chart for the SPX. Why the SPX? Well, the ES mini contract is simply the future on the SPX index. And the only difference between the two of them is the interest time of the future to its expiration over the price of the index. And that's where the differences lie. And when the front month contract, which is currently June, gets near the expiration of the ES June contract, we'll move into the September. Obviously, more time, more interest calculation, wider difference between the two products, but they basically are extremely correlated. And then you have the SPY, which is 1/10 of the SPX. But the SPY, unlike the SPX, pays out dividends because it's an ETF. So the synergies there are very close to the ES and the SPX, but there's a dividend difference in there as well. And it's 1/10 the price of the SPX. So when you look at that chart on the top, it's a regular 15-minute chart, just like 1 minute, 3 minute, 5 minute, 10-minute, weekly, daily, monthly, yearly, whatever chart you have time frame, that's very familiar and very much like the chart you're seeing in the far right SPX chart. The only difference is we have our technology, far as happy indicators, laying over a simple bar chart view. On the bottom, you see another segment. What is that segment down there? Happy CI, CI, diff, CG. Okay. What is CI, CI, diff, CG mean? Well, we're trying to give you a presentation of trend up, trend down, and the velocity of that trend. Okay. And this is the far right chart. I don't know if you can see any little mouse that might be there, but my mouse is very tiny compared. There's that little yellow. There he is, that little yellow guy. There, right there. So when you look at the bottom part of the chart there, you see all this information. Fari always explains this better than anybody. I explain it to the best of my knowledge. There's videos that are available to explain everything about Happy CI, CI diff. The bottom line of what it is, though, is it's a trend-creating product of indicators that's depicting, if you look straight above in the SPX 15-minute chart, you can look at those bars up and down, and you can correlate them to the depiction of the CI lines. What are those lines? You're seeing that color, which is like I still don't know that color. It's like I want to say turquoise color. That's a good name for it, turquoise. And it's overlaying a red and a gray area. Well, those lines are depicting the trend. When the lines separate, that means that trend is really accelerating in that direction, as you can see on the far left of the bottom of the chart. Okay? Went up top, and then it's coming down, coming down, coming down, and look at the separation. Now look at above, you see the actual 15-minute bars depicting exactly what those lines are showing you. The move up, and then the crash down. Okay? The green bars, which we call our zero medium line. Okay, zero medium right there. You see a little tiny blip right at the far right? That's the most current extension of what's going on with a trend. Is it flat? Is it up? Is it down? To the far left, you could see when we were running up, the bars were getting taller and taller and taller. And you can see the bars are accelerating upward. You can see the lines are accelerating upward. Well, and then when all of a sudden at that top bar, which is the last green bar, there's a red 15-minute bar. And what's happening? Well, look at your bars on the very bottom. The trend's ending. Okay. Now we're crossing into the DMZ. When that red bar crosses into the top green part of the DMZ, the upper quadrant of DMZ, you see where it crosses on the bottom. It goes from the top and goes right through. And the red area of the CI is to basically tell you that this area is an exhausted bought area. Doesn't mean it's over, though. It keeps going. What tells you it is over is the cross down through it and the changing of these bars on the very bottom. Tallest, tall, little less, even less, boom. Okay, now it looks like it's over. Well, wait a second. A couple bars popped up and it popped back up until when? When that line broke through and the DMZ got perpetrated right up here. That's exactly what that is showing you. That downward slope against that breaking DMZ is showing us that, we have a trend developing here. And look at the bars down here. They're depicting that. The light orange is the beginning, and then they get really dark, dark orange. And they keep getting longer and longer and longer. It's important. Why is that important? The further the trend goes down, what's happening? It could be getting exhausted and tired. And it could be time for what? A reversal. As we know, mean reversion is very important in trading. So what's happening? We extend down all the way down to extreme velocity here with the CIs. And then the bars extend down. And then all of a sudden, what's happening down here? Our little blue dots are telling you that the market's exhausted, but they keep going down. It means it's oversold. What? But you're not buying yet. Why? We want those dots to be adjacent to each other horizontally. That's a better sign of an overexhausted move, which is down here. And look what's happened. We're coming back up to the zero medium. And we're turning right here. Look at that sharp turn. And we're pointing upward. Being caused by what? The green bars accelerating to the upside. And where are they at? They're still in the DMZ. It's happening right in the DMZ. And it's right by the median of the DMZ. And it's pushing upward. Well, what are we looking for now? This cross again. Here it is, another one. A little one crossed up, and then it crossed back down. Crossed up. But what do you notice about those little jagged moves right in that area? Well, it's happening pretty close to the zero medium. I like when it happens up here between these bars that are plus 20, plus 25 to the far right. And if you notice, on the upside of exhaustion of a rally, look at the downside. There's those same bars, 20 and 25 negative. So we like the change of tone, the change of direction, the change of trend to happen in a higher area to the upside on a rally or a lower area to the downside. Why? Because then we could see that we're going to get some follow through. We thought it would happen here, but notice our bars, very tiny. And what's happening? Jagged. They're not really breaking upward and through with consistency and strength. They're backing down. Then again, they pop. Look at the pop right up in here. We cross up, we create this green bar, which is extending, and there you go. And what happens as it's extending? Well, this area here, okay, is the gap of the opening and the close of the SPX, which opened up higher. So you're getting a little bit of a dysfunction as far as the bars are concerned, but you see it's up there, and you can see that it's rallied up to the top. There we are again, up. We're in the up 20 to 25 area, and what's happening? We're getting some of the chartreuse dots. They're not adjacent, but they are going up, which just tells us beware. We're in overbought territory. We might be getting a trend back down or reversion. And then what happens? As it goes 1, 2, 3, 4, we get a big 15-minute down bar. And where are we going? Looking for that DMZ again. And when we pass through it, boom. When we pass through it, boom, right through. And when we pass through it with velocity and strength, these bars extend out. Okay? So what you see up here in the 15-minute chart is being depicted down here in all the different quadrants of the CI div. Okay? So you look at this and say, okay, I understand. It's a time chart. It makes sense. Well, what else can you tell me? Well, let's come left. This is ESM25 OTF. Other time frame plus median. Well, this is not a chart of time. It's other than the time frame. What is it? It's volume, a volume indicator of bars being created by volume. Median, it's a little more than 10, a little bit probably less than 25 of volume coming in. That's creating these vowels as they're popping through the system, either very slowly or either very fast. And the sales bars look just like time chart bars, but they're not. They're volume time charts, volume time bars, volume, and volume. And look at down here. CI again, same plus 20, 25, minus 20, 25. Same coloration, same zero median, except a lot of jaggedness means a lot of the indecision. As you can see, you got a red, you got a green, you got a red, you got a green, as opposed to red, green, green. So you're seeing.
Mark, can I make a quick comment?
Go ahead.
These are block bars.
Yes.
Look at block trades. We're not looking at volume. Volume alone is not enough. Volume is too raw. Look at block. So I want to make sure we don't say just volume.
Right.
So look for discernible block trades, because it's the whales that move the market, not the small fish. Volume could be all kinds and mixed. Yeah,
we're looking for footprints.
Exactly. So best thing is to instill in the mind of our observers who talk about. There's a reason this thing moves like this, because it shows what the big guns are doing, and that's we want to just swim with them. We don't want to be haphazard in the market. This market is crazy enough. We want to use the footprints.
Very, very valuable. And we have OTF X large and OTF plus XL plus. Those are larger block trades. Medium is a smaller block trade. X plus large is the larger block trade. And the big horse is OTF plus XL plus. And if you kind of look at them, and I always make this analogy, I kind of like to think of them like an accordion. And as an accordion is if I have the accordion totally spread out full arms width, and then I bring it in, you see how that accordion squeezes. If you were to take another chart that we have, which is a ESM OTF small, and you were to take the small, the medium, and the large, and move them all inward to the left, they would all fit right into, as far as what the depiction of the absolute tone is of the large, the XL plus. So it's a very graphic depiction of tone. And you see that just by looking at the medium, a lot of jaggedness, a lot of activity. And then when you go over to the plus large, you don't see as much. It's less, but it's still depicting a lot of activity. And then look just to the left. Okay? It's nowhere near like those other two charts. You're getting the same depiction of momentum up and down. You're seeing the same overbought, oversold. and you're seeing the same crosses through, your different DMZ areas, except you see up here, you've got sigma channels. All right. What are our sigma channels? There's the medium. I like to compare sigma channels, and Fari could correct me if I'm wrong. I like to think of sigma channels like standard deviation moves. I think they're better because they're more dynamic. And you see the median, 54.97, 1 sigma up, 55.20, 2 sigma up, 55.39, 3 sigma up, 55.60. This is the OTF plus XL plus where I have my mouse. Okay. And that's where that activity is taking place. Those are the upside, and then you have 3 to the downside. Well, obviously, just like standard deviations, the more extreme you go, the wider that curve is underneath the move. Same thing here. There's some extreme moves this morning. If you notice in the middle, I can't tell the day, right? Because it's not a time chart. All I know is all this is happening on the 24th. All right. Look at that move. It's vertical. It's a vertical ascent. 1 sigma, 2 sigma, 3 sigma, all the way up, and it keeps pushing it. Then it backed off and is trying to go again. And they get channels, which is really fun to watch. When you see they get in channels of maybe 1 to 2, 2 to 3, 3 to 4, it's kind of watching a trend developing of how the product is trading as far as pricing when you look at that. So we have these other time frame charts. We have the 15-minute SPX chart, and then we look in the middle one. The middle one, to me, that has so much information in there and is so valuable. And a lot of it's valuable. Why? Because it's a combination of all of our technology. It's a 5-minute ESM bar chart. Everybody knows what the bar chart is, okay? And it's flanked by our other block trading charts. So peripherally, you're seeing blocks and a 5-minute action chart. Doesn't get any better than that. And you see DMZ. The red line is the bottom of the DMZ. The top line is the top of the DMZ. And the little dotted yellow line is the median. Obviously, when a market goes side to side, as we call sausage, it means it's indecisive in the direction, isn't it? Right? Just going up 4 or 5 points, down 4 or 5 points. Indecisive. It's lateral, horizontal trading. Worst time to trade. It doesn't have direction. We want direction. We want trend being created by using our DMZ to help us with that as well. And then we have our VWAP here, and then we have our custom MBS. These are valuable tools for watching when the market's moving to them and away from them. Then beneath there, hey, there's CI diff again with happy. And there it is, the zero median. And as I was depicting what's going on in the 5-minute chart up there, side to side, side to side, side to side, well, guess what's happening in the CI here? Side to side, side to side, indecisive. That means that nothing's either going above the zero median or below. There are these little hiccups, as I call them, just little tiny bars. Nothing like here, which is a trend up and separation of the lines, creating velocity. Right above it, well, look at that. Just like I showed you in the SPX and the other charts. It's showing you the momentum of the bars. On the upside, it's all positive. And here we are, extending our bars and widening our gap of velocity. All the way until when? When it slows down. When it slows down. And then you see the red bar pop up. Little kink is caused there. And then it starts again, going back up a little bit, little hump. But it's still basically in a positive territory. Not an extreme positive territory like a plus 20 or 25 up there, but it's a gradual ascent. Okay? And then it continues that until we get to near the end of the last probably hour and a half, 2 hours. And then we have all that side-to-side action, which means the zero medium is just above and below or dead flat on it. Beneath there, we have the ST vol, which is like average true range, which is telling us how volatile the market really is, because that's depicting what stop you need to put in place for the dynamics of making a trade. You can see how the vol is. Notice that when that market was rocking and rolling and moving up, we had a very high ST vol. And then things went side to side. If the basically trading up and down in a small, tight range, sausage. That means that the ST vol average true range is being depleted. Came all the way down to 4.8. And the craziness of the last 3 weeks, this ST vol I saw at what I think is an all-time record. It was 105, which is unheard of. And a lot of the days it was between 35 and 60, also unheard of. But that's the volatility you had in the market because your time chart bars, the SPX, the DMZ 5-minute, and all the blocks in the other time frame charts were going wild. They were big swings, price wise. Now you look below the ST vol, you see these are the hourly bars of the depicting the movement of the S. And we depict that information as well. So you can see it's in the first hour channel. It's breaking through the first hour channel. And all of that represents a change in direction and a tone change. A lot of times when you have a big move, you might see one bar, 2 bar, 3 bar, even 4 bar is very rare, but it's been seen, where you're breaking through those levels up to go to the next level. Trend and speed. Beneath there, we have our dollar tick 5-minute. Very valuable to me. I use that a great deal when I'm trying to see for levels of what? Well, if you look at our top levels of exhaustion in blocks, in the SPX, and even in the DMZ, and you really were to get granular with it, you probably could find where the ticks met their peaks to the upside and met their lows to the downside. Very, very analogous. It's amazing. And that's a valuable tool that helps me during the day when they're in sync with each other because I could see the momentum swings in our other time frame block trades charts, the 3 of them, and I could see the CI going upward, and I see how the 5-minute charts are changing. So there's an enormous amount of information that's valuable, and the ticks are driving through our Sigma channels. 1, 2, 3. I love looking for trades that are where the ticks are above or near the 3 Sigma channel or below the 3 Sigma channel. What have you noticed when you're seeing they get above the 2 and 3 Sigma channel? Seems to be they always kind of mean revert back to the median. How about that? That's what futures trading is all about. Mean reversion. Peaks, the tops, and valleys, the bottom. So a combination of all this information, all this technology depicting exactly what's happening with trend, up or down. Another part of trend, the speed of the trend. Okay, so I equate that to a car. You're driving a car on a city street, the speed limit's 30 to 35. It's a lot easier to stop once you're going 30, 35. When you're on the tollway going 80, you don't stop in 12 feet. You're going to have to probably take 80, 90 feet to stop. That's kind of how I look at all this information. When we're in a strong trend and those lines separate, that baby's still moving. It's going to take a little bit of stopping to bring it back down. So you got to be comfortable with understanding the velocity and the trend before you decide to jump in there and take a trade. Am I going to take a trade where the separation is showing me there's huge velocity up or down because they're widening out between each other? These right here, rates in the SPX right there. Am I going to sit there and all of a sudden say that I should jump in here and buy while this is happening? I can't see where my mouse is to the right. That hasn't happened yet. But all I see is the separation of these bars, these lines widening. This baby's still going, man. I'm not getting in the way of it. It'll run me over. Same thing to the upside. So you're getting depictions of intricate information relative to blocks, relative to time charts, relative to happy indicators. And then when I'm overviewing that and what I'm seeing is when I want to make a trade. All right. Well, because ST vol a lot of times has been so unusually high, I'm not putting trades on when we're at 30, 35, or 100. I tell everybody just relax and keep calm. We got to wait for the market to back off. And once that happens, and vol comes down, we can maybe make a trade. That's one of the things that I'm waiting for. The other thing that I'm waiting for is if I'm making trades in this high vol environment, I got to make sure my buy and sell levels are uniform with all the technology that I'm seeing trend wise, velocity wise, level wise. And then at the same time, if I'm picking a bottom or a top to do something or joining in a trend, I got to make sure that if I'm creating a stop against that my stop, when it retraces, has got some support there to back me up, as opposed to just falling off a cliff to the downside if I'm trying to go long, or on the upside, instead of staying in the plane with the parachute, I'm not. I'm taking gigantic risk. Not good. So I'm incorporating ST vol levels as stops relative to not what's 100% on the screen. It's really relative to the trend, the velocity, and where I'm seeing further support and resistance at levels that I'm putting trades on. And call it luck. I think a little bit of it's skill, but I've been doing this during the last 3 weeks, and my normal stop, which I think is pretty amazing, has always been 5 points or less. Even when there was a 30-point ST vol, a 25-point ST vol, an 18, a 15, a 10. My greatest stop was 5 points. Why? I want to help the people that don't have a lot of capital. I want to get them confident that they could go in there and make trades with these types of stops to succeed. And that's my goal. That's one of my goals. The ultimate goal is for everybody that's in the room trading my suggestions to do what? Make money. This is what it's all about. You want to make money. And that's really what goes on in this room every day. And when I have to go into sessions to teach something, options, I'm an option mentoring teacher. Dennis Parmalee comes in and gives tremendous, tremendous color of ranges of what he's seeing and helps you understand looking at the charts where the charts are changing tone or giving you levels of support and resistance from these charts in front of you. So it's a tremendous team. A lot of teamwork, a lot of information, and more importantly, tremendous transparency and validation done by the recording, by the chat room, and by Nancy's amazing daily work. She's unrelenting in keeping track of everything that we do, and she's tremendously and greatly appreciated by me because it's a lot of information. And this is who we are. We are a team of people that are here to make you succeed. And that's the bottom line. And Fari's been this way as far as bringing products to people for all the years that I've known him, which is over 15 years. And every time there's a transition to the market, he's making that transition because he sees it. He's very active, he's very talented, he's knowledgeable, and he's the real guru. And, it's a powerful team. In our NQ room, we have Peter Cook. Peter Cook's amazing. So there's quality people across the board, top to bottom. And there is really no bottom. Everybody's on top. So we do our best and we appreciate participation. We appreciate people that come in and ask questions. And all we want to do is provide color, education, and more importantly, profit. That's
Just a
all I
quick,
got.
just a quick comment, guys. Yes, he is going to invoice me for that. Yeah, yeah. So, it's, no, but seriously, this is teamwork, and we have different backgrounds. A little bit hard-headed, each of us, but because of our validations of what we have accomplished in our past, and but we put our differences aside and work with you. The key part is transparency. Learned that long time ago in Chicago. On the floor, if you're not clear and transparent, you're nobody. Nobody will bet a dime on you. And so, good, bad, or ugly, you're gonna hear it first. Any
So does
questions?
anybody have any questions?
Yeah, there we go. Any questions for Mark? Any questions for Mark, guys? You can post it there. Let me go to
Happy to answer anything. Anything you want to ask, I'm willing to answer.
yeah.
Come on, I'm not that good in describing everything.
Yeah.
I talk a lot, but I'm not that good. Well, those who aren't here that are going to listen to this and see this, I have been a big believer of everything that Fari has created through Hamza and Linux. And I have professed this to hundreds of people that I cross paths with in my options mentoring that I do. And I tell them, if you want to really see some amazing technology, and I point them to Fari's website. This is tremendous information that you use for trading anything. It's amazing. And I'll stand by it. I've used it. I've made money with it over the past 15 years. In stocks, I use it for the happy indicators. It's a tremendous tool. Earnings trades, it's a tremendous tool. Futures, you see it all right in front of you as I was depicting it. It's great stuff. It's just great stuff. Charles, he's got.
Could you go over? I looked at today. Okay. Go ahead, Mark.
I can't see the rest of his question.
It says, could you go over how you looked at today? This is from Charles.
All right. So today was, I complained for most of the day, just so you know. Why? We came out of the box. And if you look at the best depiction of that is obviously in the OTF large because it's taking the bigger size. Bigger size means it's giving you a really broad picture through the day.
Okay, go.
Okay, the XL Plus, see that?
Go ahead. Yeah. Go ahead.
And we popped up, we came down, we popped up, and then it went straight up. It was vertical. You had a little respite here, probably between, if I remember, 54.60 all the way up to 77. You had a little action back and forth. Okay. And then it went to the next level, which was the 83, 84 level, up to the 90. And then, believe it or not, it got up there and it stayed in that range for a long time. As you can see, the side-to-side action here in the middle chart, the DMZ ES 5-minute chart. It was having trouble breaking through what range? The 5,500. This is where we were. If you go back to yesterday, this is where we topped out yesterday before we cracked down to 53.75 on the future. And if you look here, we came right back and we were battling it out through most of the day to the very last hour and a half, 2 hours a day. And it finally popped through 5,500. And then we finally went to some newer levels up higher. And then we retreated again. But once again, if you look at your charts, look at a weekly, and you'll see that we visited this 5,500 top area about 4 or 5 times already with the ES.
Yeah.
So, I'm watching that action. When the train left the station, which is all these vertical bars, Charlie, it's hard to jump into these trades here, okay? Because it's just straight up. And there's nothing for me to balance the left side to the right side other than history. So I'm looking at history, and the problem with history was that there was a gap, okay? So if I'm going to jump on board, it's easy to see the bar that's after that one bar and then the next bar. If you take a card, which I always do a lot of times with chart, you take a card and you put it over the right side of the chart. And if I'm doing that, even on the charts in front of the screen here, well, you tell me what the next bar is going to be. Would you buy that? Would you buy going at the top of that bar? It's had like 7 in a row. Would you be comfortable in getting long there? It's very difficult to do. So what do I wait for? When I can't get into the trend that's already left, as I say, the train left the station. If I can't get into the trend, what am I waiting for? This action that you see here, right in here. What is it? Well, we're getting some bars up and bars down. Now, in real time charts, and I'm looking at that, that's where I made my first trade today. I waited all the way up there, which was probably 2 hours into the day. And what was my trade? I wanted to get in because I thought the trend was going to continue higher, and I thought we were going to go possibly to 5,500. And when it backed off, I found the level to buy, and my level of buying was between 63 and 66. We made a buy in there. Okay. A couple folks bought. It rebounded back 4 or 5 points. They took 4 or 5 points out of the market. And then we moved on to the next trade. That next trade was later in the day because I had to step away and I was looking for similar action. I like history. I like some history to be created of where the market has been and where it's going. I could see where it was yesterday and any time back. I use all that for my information. Constantly reviewing history. Constantly. All right. Where we've been is history. In options, implied vol, you look back at historical vol. Those two dynamics are extremely important.
Exactly.
Same thing here. Go ahead, Farid.
No, I said exactly. I'm just confirming.
So history provides future trading opportunities. So now that we're getting some difference in just the spike up, as you can look at the chart next to it, the OTF plus large, well, guess what? You see a lot of ups and downs. Well, we got play in here now. We could possibly get in if we think it's still an uptrend. We look for levers to get in when it backs off, and boom. Okay, and then we break through that level, and now we're looking for, well, guess what? Here we are, 54.97, 5,500, and it's been a lot of time up there today, up and down, up and down, up and down. So I use that history to basically confirm what I'm looking at that could be a possibility to the right of the chart. Anybody could tell you the right of the chart after seeing it. Do what I just did. Show them a pattern and cover up the entire right side if they didn't see the action from the day, and tell them where's the market going from here. I don't think you'll get too many confident people making a comment on that. All right, great traders will never tell you that if I woulda, coulda.
Yes.
There's no such thing. Okay, if I woulda, coulda doesn't work in trading. You either jump into the water and you probably won't touch the bottom, and then you got to start threading water and figure out what you want to do. So what do you use? Technology. What do you use? Happy indicators. What do you use? Intuitiveness. What do you use? Gut instincts. You use everything you can cling to help you be successful. In our chat room, this is what helps us become successful, is all of these technologies in front of us, learning how to use them and read them. And, like I said, remember what I said about the car. It's easy to stop a car at 30 miles an hour. It's not easy to stop a car at 80 miles an hour. So when you get velocity and trend, you got some opportunities there to pay attention to what's happening, where it starts to slow down and say, hey, wait a second here. This velocity is giving it up. We're at a high area. This sucker could back off and come the other way. That's how I look at every day, every hour.
A quick comment, if I may. Folks, because of the market volatilities that we have faced, we're leaving the machines, the servers on at nighttime. Rather than resetting them at night and shutting it off, we're resetting them first thing in the morning after reconnecting with you again manually. But so overnight, you would have access. One of the reasons you need that is OTF moves slowly. OTF does not move fast. It has to do with block trades. Okay, that means big boys. So you need to sometimes be patient and watch it. If you're up early, hey, not a problem. Just grab a coffee and come and sit down and watch it. You don't need to trade, but that allows you to be prepared when the action comes, when Mark gets in and says, "Oh, we're gonna do this now." Right then, intuitively, you you know why. Listen, we got guys here like Johnny. He's been here what 10 years now. How long Johnny's been with us, Mark?
It's
20,
over 10
20
years.
Yeah, I mean, this guy goes once a year. He takes his family down to Caribbean for a holiday, in the middle of a winter. Guess what? He calls in. It's incredible. He calls in from down there. He's just like addiction. He can't let it go. And he's not swinging big bat. No, ones and twosies. But every day matters. Singles and doubles. Singles and doubles.
And for information's sake, John was a grain trader at the CBOET.
Or Seabot. Yes, that's right. He's a great. Yes, yes,
That's where he came from. He came from that pit, and
yes.
he saw this, and he just said, "This is perfect. I want this."
Yeah.
Because I remember when I was showing it to him, he just absolutely said, "This is amazing. I got to do this." And like
Yeah.
Fari said, he's been with Fari ever since. So I mean, you can't get a better testimonial than someone looking at it who's a knowledgeable, experienced trader in the markets and say this is perfect. And now he's been doing it for 10, 15 years.
Yeah.
Well, that's all I have. I want to thank
Great.
everybody.
Thank you. We'll all thank Mark. You have done a tremendous contribution to this chat room. I want to also thank you, Dennis, and also Nancy. In their own way, they've added quite a bit too. Uh, Folks, with any questions you may have that we didn't come to your mind, or we didn't answer, or we went over it a little bit too fast, no worries. You can send us an email or send us a picture, what have you, and we're more than happy uh, uh, be able to figure out a session, even a midday session, middle of other sessions, to go over and answer you. Let me see. There's a question here. That's good. Can I say, can this system to find a bottom entry for a long term? No, no, absolutely not. No, 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 no. It's not market timing. Douglas is asking a very good question. Let me go over that. Let's see. Curiously, can this system uh, uh, be used to find the bottom entry for a long term? Let's see what else is the rest of this here. Let me open this up. Hold on. Okay. The system is strictly for short term trades and scalping. No, it isn't. You can't use it for scalping. We used to have it on VIX. We had a very, very experienced Chicago guy. That's all he did. Their firm, all they did was VIX, and they were you were scalping VIX with it. But it's tedious. There's a lot of work involved. But not it is not cannot be used for long term. Why? Because these guys, the Excel Plus guys, and Excel, let me move this now, and large, these guys are finicky themselves. Okay? These block
Well,
sizes. I'm sorry.
I have another addition to that, Fari. I
Go ahead.
mean, Doug, you and I talked about this when you were in the room, and you could take a trade, and you've done it before, and you like the trade, and you see we picked the bottom, it's a great price, and it's running up 10, 15 points, and you have it. You could turn that trade into a long term trade by just following with the trailing stop. So as the market's open all the way till Friday, other than the close at between 4 and 5 each day, you could have your stop trailing stop in there and let your long run or your short run to a level when you think you've gotten what you wanted to get out of it.
Okay. There's another question there too. When taking a profit on a fast-moving scalp trade, should you sell at the market when what? Let me open this up so I can see it. I'm sorry. The choice is at the point where you want to get out, or okay. Let me tell you how I trade this. I trade everything at market. My issue is very simple. Uh, I want to be in long, being short, or I want to be flat. I'm not concerned about my price. I have, this is a, let me throw another thing here so you realize why. If you look at this carefully, okay, and here, just look at OTFs, just look at OTFs. These are fractals. They're sigma channels of a fractal pricing. Fractal is what happens inside of a shell, a seashell, okay, how it turns outward, okay. What we look, that's how market moves. That's how the universe expands. It's a fractal. So what we do is that my question is to myself: do I want to be long? Do I want to be short? Or do I want to be flat? In between, my prices that doesn't matter. I'm not worried about why. I can put it with size. I can modify that with size. So when I go in, I'll always mark it. I don't go there and say, if they give me this price, I want to be long. That's for kids. At least I don't trade like that. I come in with size and I push it to where I want. Now, I especially do that with NQ. I have advantage in NQ that you don't have in ES. It's called liquidity. We actually wrote a program that calculates our liquidity live. Okay. But in the NQ room, sometimes I talk about it. And sometimes I share here with the ES too. ES is a bigger liquidity. So it's tougher to move it. NQ is easy. I often move NQ. I gotta admit that to you. And then I've been always also flagged. Like they come in and say, "Are you doing this to move the market?" I said, "No, this is my size. Look at how much I have on my account. It's not my personal account; it's a company account. Yeah, we're running money for people. Our minimum is 5 mil, so we have a high balance. So obviously, I got to put to work. I can't trade 5 contracts. It won't move the needle. But when I do, with the liquidity of, let's say we have a 40 by 40. These days, like this seems to be the number. We used to be around 100. It's all gone. It's just a devastating move down. Has scared everybody. Okay, so you have less liquidity. Actually, you can move it more. So when I wanted to go there, for example, down below, let's say I'm short. Down below, I put a bunch of buys to buy back. Then I hit cascade on top. 500, no, I'm saying no. 100 contract, 50 contract, 100 contract, push, 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 and it breaks down. As it breaks down, then my buy orders are down below, gets uncovered. That's a little bit different. Okay. I don't know if I want to call that scalp, but I don't argue about the price. I am looking at what these lines are telling me. Okay, look how in a fractal standpoint, it moves within the sigma level, plus plus one plus two. It breaks down, comes back up, plus one plus two. So my goals are the way I do during the day. These are the numbers I look at as this is moving. You see what I'm saying? To me, those are the value of the fractals. Does that make sense? It's kind of weird way of looking at it. It's a statistical model, right? That's all it is. It's telling me what those values are going to be live, except it's just live. It's coming to you one tick at a time. And that's how I adjust my positions. Yeah, you have to concentrate. That's why I only trade like an hour or two a day. I get exhausted. I get exhausted. What I do is not easy. My goal this year is to try to automate this. Yeah, it's not easy. Yeah. But but the reason sigma channels are used and fractals are one and one thing only. They repeat in nature. They repeat in nature. We're all animals, however you want to call it. We're all animals. We react in the marketplace same way we react in the jungle. And these are ways of measuring that. We're just measuring behavior. It's a behavioral science. We're measuring these movements. That's all. There's no magic there, Douglas. We're not saying who's a good guy or bad guy. I don't care. Is it Bruce Kovner doing this or is that Stevie Cohen? But if I can write with him, hey, that's a free ride because I don't have money that Steve Cohen has. Does that make sense? See, I don't want to shoot a bullet and sit there and start praying. I don't believe any of that. That's I know I'm a agnostic anyway, but I've got I had too much electromagnetic wave background. So what I look at is what is happening in the marketplace. Can I use it? That's why I can't trade at night. Do I watch things at night? You bet you. Have I come here? Look at the last 2 weeks. I probably come here 2 or 3 times a night, and I have no position. I come and take a look. Yeah, just to see what the state of things are. What call it call it a state variable where they are. Why? This is what's gonna. This is what vibrates during the day. the vibration of the price action, the fear and the greed. Right now, we're in a very greedy mode. This is good, but same rules better apply on the fear point too. I'll give you an example here. Do you remember here? I mean, I had guys calling me. Okay, I mean, you should see their mansion in Northampton. Oh God, they were speechless, speechless. Why? What is going to happen? I said, I don't know. Why are you asking me? I don't know any more than you do. I just look at the same data you do. So when you get to those points, it's remember the movie Wall Street. The man looks into the abyss and finds himself. That's what Tico did for us. Tico found the abyss here and says, "Daddy, we're gonna get long, and don't worry." And sure enough, but I mean, I had all kinds of issues personally myself. I had problems around here. I was short. Don't get me wrong. I've been short, but and I knew this was a good short too. Failure at 200 day. We have a zero cost. But here we come very, very compounded problem. Remember, nonlinear systems. You're not doing a plus what do you call it? Y equal ax plus b. This is not it. It's not a linear system. It's a nonlinear multivariable system. A lot of inputs. So and it's just tremendous back and forth, and then craziness of the news. I think we survived this part, but as I wrote tonight to Time and Digest, I just run out. If you're on our system, you probably got the email already. We send a complimentary courtesy copy to you. We do that when market gets really, really dicey. We share our market timing with everybody. It's a way of giving back. I feel we're I feel that we're privileged. We're taken care of. We're we're uh, uh, we're lucky. Let's share, give some back. Uh, the the problem I see here is that, and you see the last line. If you look at bond derivatives, we haven't seen the bottom yet. This is not the bottom, guys. That's why we went flat. Yes. You got okay. There we go. You got it. Any other questions for Mark Esposito, or for Dennis, or for me? Can always catch later, but okay, good. I need to now convert this back to our regular operation because this is a webinar. We have to convert back to it. Go to tomorrow for you guys, and I'm going to turn it back on. I think we need to have these machines running at night. Anything can happen. Anything can happen. We have we had crossroads. So uh, if you have some bow wow names on the, and we probably go up a little bit higher. Make sure you go to your names of the stocks. You have anything bow wow, lighten up, lighten up. You can always buy cheaper. Remember that. Yeah. Don't worry about the commission. Worry about your capital. Commission comes and goes. It's the capital you have to protect. Okay. Uh, we're good to go. Thank you
Thanks,
all.
Farin.
You got it. I'm going to process this and then post it on YouTube shortly thereafter. Good night.